Nicolas Maduro has been removed from power following a U.S. operation, and this is one of the most important global economic events in years. Let's get straight to what matters for investors' oil business. Venezuela has the largest proven oil reserves in the world, roughly 300 billion barrels, but production collapsed from over 3 million barrels per day decades ago to just over 1 million barrels per day due to sanctions and mismanagement. And U.S. sanctions largely blocked Venezuelan oil from Western markets, forcing sales mainly to China at deep discounts. What changes now? With Maduro removed, markets are pricing in sanctions relief and Western re-entry into Venezuela's oil sector. In terms of the short-term impact, oil prices may stay volatile for days or weeks due to political uncertainty. Let's talk about the medium-term impact. If oil infrastructure remains intact and a transitional government cooperates with the United States, Venezuela could realistically add 700,000 to 1 million barrels per day over 12 to 24 months. This is bearish for oil prices. Why this matters? Extra supply hits a market already facing slowing demand growth. And this puts downward pressure on Brent and WTI, likely pushing oil into the 50s over time, not higher. And this directly weakens Russia's oil leverage, which is awesome. And this is one of the most underappreciated effects. Russian oil exports are heavily discounted due to sanctions and compete in the same heavy crude category as Venezuelan oil. China and India are key buyers of both. If Venezuelan oil re-enters global markets legally, it competes directly with Russian barrels in Asia, and Russia loses pricing power and volume. Now, lower global oil prices squeeze Moscow's cash flow, which matters geopolitically as it hurts Moscow's ability to fund the Ukraine war. In short, more Venezuelan oil equals less leverage for Russia. Now, who are the big winners? U.S. refiners and Western oil companies. U.S. Gulf Coast refiners are optimized for heavy crude and struggled after Venezuelan supply disappeared. So what changes now? Well, Venezuelan heavy oil is a perfect match for U.S. refiners. Refiners benefit from cheaper feedstock and wider margins. The likely winners are U.S. and European oil majors, oil field services companies, refiners, and fuel distributors. Now, this is not about stealing oil. It's about commercial access returning after years of sanctions. Capital and technology flow to where politics allow it. And China loses strategic ground in Latin America. China became Venezuela's main oil buyer and lender under Maduro. And many of those deals were oil for loans at steep discounts. So what changes now? Well, a US-aligned transitional government reduces China's privileged access. China will still trade with Venezuela, but it loses exclusivity, and it pays market prices. And its geopolitical footprint in the Western Hemisphere weakens. And this is a strategic loss for Beijing, not just an oil issue. Now let's talk about inflation and gas prices for consumers. If Venezuelan oil returns meaningfully, global oil supply increases and energy prices ease, and gasoline and diesel prices fall over time. And lower energy prices reduces inflation pressure across transportation, food, and manufacturing. And this gives central banks more flexibility and acts like a soft tax cut for consumers. Now, you're not going to see it overnight, but over months it matters. And everything I mentioned so far assumes no prolonged civil conflict. Now, if Venezuela destabilizes, then oil supply is delayed, prices stay elevated, and investment stalls. But early reports indicate oil infrastructure was not damaged, which is crucial. Now, the bottom line is, this is not just a political headline. Oil markets likely trend lower over time, and Russia's oil revenue gets hit. And the US and Western energy firms benefit, and China loses leverage. And consumers eventually see relief at the pump. Now, this is one of those rare moments where geopolitics, energy, and finance collide, and the effects will show up in portfolios, fuel prices, and global power balances throughout 2026. Now, God willing, this remains a peaceful transition. Please type in the comments your thoughts. Thank you. Good morning, good afternoon, good evening, and welcome to our 345th weekly webcast. Please keep typing your question. I got a very quick housekeeping announcement before we get started. We're going to start our 11th annual one-year gold and platinum Haroun Education MBA degree program on January 26th. And so the way it works is every Monday and Tuesday, starting January 26th for a year. And it's 4 p.m. to 7 p.m. Pacific time. If you're in New York on the East Coast, it's 7 till 10 p.m. your time. Now, if you want to set up a call with me to discuss joining the program, then you'll see here pinned at the top of the chat is a link where you can set up a meeting with me. It'll be directly with me, not with anybody else. Very excited to show it to you as well. We have a new system as well you guys are going to love. So we have our own branded app, as you can see right here, where you get access to the 500-hour MBA degree program and 200 hours of my other award-winning courses for life, humbly. And you also get access to tons of members in the program. We have 126 so far. It's going to be a great year. Tons of events as well. And then people introduce themselves. Everybody shares wins, etc. It's a great sense of community. And if you have an Android device or an iPhone, you can actually watch the entire program using an app. So if you'd like to learn more, again, go to the link you see pinned to the top of the chat and set up a call with me. Let me get to your questions now. Thank you. All right, first question I've got is from Tommy John. How are you, Tommy? Tommy wrote, how do you raise money and explain fundraising rounds? Yeah, absolutely. So the way it works at first is you always raise money initially from high net worth investors because the sales cycle is quite short. Never talk to venture capital firms initially. It's a waste of time. Okay. Always raise money from high net worth investors. And the way to do that is you can always go to my website, harounmba.com, and download this book right here, which will teach you how to raise money. Okay, and I'll show it to you really quickly. All right, so your network is your net worth. Relationships are more important than product knowledge. So go to harounmba.com, scroll to the bottom, download this book in order to learn how to raise money or network to get a job, etc. So once you raise a little bit of money, then what you do is about a year later, once your product starts to work or you have a minimum viable product, meaning MVP, then you can approach venture capital firms. Now, if you want to learn exactly how to approach venture capital firms and how to create your pitch deck, you can join my MBA degree program. And what I do is I walk you through what I call my venture capital boot camp. I'm going to mess up my long hair here, eh? And so I have a template for everything. Let me show you what that looks like. Go over here to Excel Hell. All right. So in my venture capital bootcamp, what I do is I ask you tons and tons of questions about the company you want to start. And then once you answer all these questions and I walk you through it, we focus on the financials as well. You print out your business plan as well as your presentation slides. Now, failing to plan is planning to fail, which is why I really believe in writing a comprehensive business plan. First, if you want to learn more, just go to the link you see in the chat there, set up a call with me. Thanks. All right. Now, as you raise money, of course, you're going to get diluted, and that's okay. You can still retain ownership of the company. So what I've done in my MBA degree program, we do a lot of case studies. So for example, we do a case study on Facebook. I invested in Facebook in my venture capital fund many years ago. And on the cover of the S1 here, you see that, and this was released on sec.gov back in 2012. But you see that Mark Zuckerberg controlled over 50% of the voting rights in the shares, although he owned less than 30% by the time the company went public. Again, I can teach you more about raising capital from venture capital firms and how all finance rules work and how to invest in all that stuff in my MBA degree program. All right, and if anybody has follow-up questions, please let me know. All right, next question is, what is the best way to approach investors on LinkedIn, and how do you pitch your idea or at least get a meeting with them? Yeah. So step one, you want to have an incredible LinkedIn profile. In my program, if you sign up, I give you one-on-one coaching, and I make your LinkedIn profile myself with you, not my staff. Step two, what you want to do is get lots of recommendations, which I can definitely help you with. Step three, what you want to do is you want to reach out to people that have something in common with you. And then set up an informational meeting with them. Don't ever say why you want to meet with them. And again, you can always go to my website and download this book to learn how to network. Then what you want to do is you want to show them your investor pitch. Now, the best investor pitch I can recommend, whether it's your startup or if you're presenting in a big company or whatever, is the Airbnb pitch deck. Now, I'm going to show you the Airbnb pitch deck here. I'm going to share the link in the chat as well, because this is the gold standard. Airbnb pitch deck. Okay, so you want to keep the pitch deck simplistic. Less is more. You never want to have more than 3 bullet points per slide, okay, or 3 images per slide. And this is using Steve Jobs' methodology of the rule of thirds. And every great image you've ever seen, every picture has got 3 layers as well. To learn more and to download that template, the Airbnb pitch deck, just go directly to the chat. Thanks. All right. And I want you guys to give me a little bit of feedback, please. Let me know if I'm speaking too quickly or too slowly, etc. You guys are the customer. This is my 345th weekly webcast. I'm doing this for 8 years now, and I'm still far from perfect. Thank you. All right. Is it possible to raise money with just an idea, or do you need to prove that you have traction in the market? No, you can certainly have an idea. It's called a minimum viable product. It can even be a wireframe diagram that you can get somebody to design for you on Fiverr.com or Upwork.com. And the most important thing when you pitch is your confidence and the quality of the management team. Now, when I used to work in venture capital, I used to always say, I'd rather invest in A management team with a B business model instead of investing in a B management team with an A business model. And quite often what happens is this. Confidence leads to perceived competence. And the person interviewing you that wants to invest will assess your ability to sell. And they know your business model is going to change materially over the years. But they want to know if they can still get excited about you and what you're pitching. That's just the way it works. All right. Next up, what do you think of the optics of Venezuela being forced to buy American goods and services in exchange for oil rather than buying them on their merit? Yeah, I don't think anybody should ever be forced to buy anything. I believe in a free market, and I don't think the administration here in the United States is going to do that. Yeah. We live in interesting times, eh? All right, next up we have Malcolm, who wrote, good afternoon, Chris. How are you? Happy New Year to you too as well. And I hope everybody writes down their goals, okay? And I want you all to share with me right now what your New Year's resolution goals are and a deadline date. And I'll get started. I want to put on 15 pounds of muscle by July 1st. Okay, that's what I'm trying to do. And Tony Robbins, who I met over a decade ago, when I worked in venture capital, actually, I introduced Tony Robbins to one of my portfolio companies. And what he did was he convinced me to teach. And I'm so glad I did. But what he said was that most people give up their New Year's resolutions by the 3rd week of January. And the reason they do is because they don't set a deadline date. And so I want you all to set a deadline date. And I want you to vocalize your goals too. So everybody, let me know, please, what your New Year's goals are. Now, Malcolm wrote, as a disciplined investor, what is the best way to value a stock pre-IPO? Yeah. So when you invest in companies, you have to look at quantitative, qualitative, and financial metrics. And I'm going to show you a framework that I designed that you can use as well. Okay, and this is available to students in my program. So whenever you analyze a company, you always start off with the management team, because what is a company? It's the quality of the management team. Then you look at other metrics like what they sell, target markets, competition. Then you have to quantify stuff. Okay, so you look at the total addressable market. You never want to invest in a company in a tiny market. Okay, you look at the growth of the market, et cetera. Then you're going to look at financials. You're going to forecast the financial statements. Okay, then you're going to value the company using various valuation methodologies. And what will happen is when you fill out this template here, and this is dummy data, is you'll get a 1-page write-up as well as a detailed report that you can actually bring to share with your potential employers, or if you manage your own money, you can use that as your template to decide whether or not to invest. So what's the best way to value a company when you're doing investment research on IPO or any company? Well, you want to look at your earnings estimates in 5 to 10 years. How do you do that? Well, you forecast the financial statements, and I'm going to give you a very quick summary how to do that, okay? This is just back of the envelope. All right, so this is an income statement here. So you always start off with revenue. People think financial modeling is complicated. It's not. You forecast revenue. What do you think revenue growth is going to be in the next 5 years? Okay, so we forecast the next 5 years of revenue, okay? Now, then we're going to forecast these red items, which are expenses. Okay, and we want to see leverage in the model to the extent that revenue is growing faster than expenses. Then you're going to get net income. So you get net income for the next 5 or 10 years. And that leads to earnings per share. So let's say we forecast $1 in earnings per share in 5 years. How do you value the company? What is that company worth in 5 years? Well, the best way to think about valuation is as follows. The S&P 500 historically trades at an average price to earnings multiple of about 15 times. And the S&P 500 historically has about 15% earnings growth. So you take the price earnings divided by the growth rate. So 15 PE divided by 15% growth is 1. Price earnings growth of 1. So that means that if a company in the S&P 500 has earnings growing faster, say at 25%, it should trade at 25 times that dollar. Conversely, if a company in the S&P 500 has only 11% earnings growth, it should more or less trade at 11 times earnings. What does that mean for our target price for the IPO or the company you're doing investment research on? Well, in 5 years, if we forecast $1 in earnings, if between year 4 and 5, we have 30% earnings growth, then that means that in 5 years, that stock should trade at 30 times $1. So your target price is $30 in 5 years. And you always got to be very long-term focused, okay? When I used to run money, I used to tell my team of analysts, my hedge fund, I don't really care about the path. I care about the destination. And Warren Buffett, who just stepped down from Berkshire, and I can talk about that in a lot of details if you want, but Warren Buffett, whenever he invests in a stock like Coca-Cola that he bought around 1990, he still owns today. He always assumes the markets can be closed for 10 years. The longer the view, the wiser the intention. Yeah, always be long-term focused. And there's other ways to value companies too that are not profitable. What you can do is you can look at price to revenue, and you can also look at discounted cash flow, which I don't like very much, but I can talk about that in more detail. Thanks. All right. Is it smart to wait out the IPO hype and invest during the dip and then let the stock grow naturally? Yeah, I always tell myself when I do investment research on stocks, I can always buy it cheaper. And you got to be patient and be very careful, please. I say this with love in my heart, of FOMO, meaning fear of missing out. So what I usually like to do is whenever I have a position in my portfolio, now I never have more than 20 positions in my portfolio, and I never have more than 5% capital in any one stock. But what I like to do is this. When I come up with an investment idea, I immediately buy 25 or 50 basis points, meaning 0.25% or 0.5% of my portfolio. And then I hope I lose money on it. What the hell was that, Chris? I hope it goes down, so I can scale it to a full position, meaning about 5%. How do I know when to buy? Well, I usually like to buy when the RSI is 20, meaning the relative strength index is 20, meaning it's oversold. Always tell yourself I can buy it cheaper. Now, when it comes to IPOs, and I invested in companies when they were private in my venture capital fund and when I worked in venture capital, and then I sold those companies when they went public. But the way it works is this. If you're an early investor and you hold pre-IPO shares, you cannot sell on day one. There's what's called an IPO lockup. You have to wait 6 months. And so with my portfolio companies, I don't care how amazing they were. I would sell a lot after 6 months because well over 90% of my liquid net worth was in these stocks, okay, that I invested in venture capital. Okay. And so what that means is this. There's a good chance from a supply-demand perspective, the stock is going to get murdered 6 months after IPO when the IPO lockup is done. That can be your opportunity to back up the truck and buy and make it a full position. Yeah. Okay. Next question is, from your professional perspective, meaning my many years of failure, what is your valuation on Well Healthcare, ticker WELL? I've done my due diligence, but would love to hear your feedback. Thanks. God bless you. God bless you more. Thank you for that. Yeah. So what I would say is this. Earlier on today, what I talked about was forecasting financial statements, looking at the earnings growth between year 4 and year 5, and then valuing it based on your earnings estimate, okay, and growth rate. That's how I value that stock and all others. Yeah. Okay. Next up, hey, Javesh. He's got 3 questions here. Happy New Year to you too. I have mutual funds at one brokerage that I want to move into ETFs. Okay, yeah. And before I get to that, I don't recommend anybody buy mutual funds. Mutual funds are an absolute scam. Okay. Why do they exist? Well, they exist because a lot of mutual funds spend a fortune lobbying in DC They also spend a fortune on advertising with these feel-good commercials. And they also have very long-standing relationships with human resources departments at large companies, meaning benefits, 401ks, and all that stuff. Now, mutual funds quite often charge 3 to 5% in fees, including hidden fees every year, and you pay higher taxes, versus ETFs that can charge as little as 0.03% per year. So I only recommend investing in ETFs. Now, I want you to always do your own due diligence. But for me, whenever I invest in stocks and I don't know where to put my money, I just throw it in ticker VOO. Now, ticker VOO is the ticker for the Vanguard S&P 500 Index Fund. And let me go there with you. Whoops. Okay, let's go. All right, give me 1 second, guys. Having a bit of a technical issue. All right, here we go. Good. All right, finance.yahoo.com. All right, so let's type in the ticker here for VOO. Okay, again, this is what I buy when I'm not sure where to put my money. Always do your own research first, please. So you'll see down here that the fee expense ratio is only 0.03%. This is where I put my money. Don't ever buy mutual funds. They're an absolute scam. Now, your follow-up question is here. I'm hesitant of selling my mutual funds and buying ETFs because I don't want to trigger a large tax bill. That's fair. What's the best way to convert or transfer them? How should I plan this strategically? So what I want you to do, what I want everyone to do in this call, is I want you to all have an account. Okay? This is the best investment you'll ever make. Way better than buying any of my courses and stuff. And the reason I say you have to all have an account is because doing your own taxes is like doing surgery on yourself. There's a reason the CPA designation exists, just like the MD designation exists, because the tax code changes all the time. You can't keep track of that. So what I want you to do, if you don't have an accountant, there's no Yelp for accountant, right? What you have to do is talk to your successful friends, family members, aunts, uncles, etc., colleagues, and ask them, who's your accountant? Get an introduction. Then I want you to ask your accountant, should I sell my mutual funds and put them in ETFs? Now, if the mutual funds are already in your 401k or retirement savings program, whatever country you're in, it should not trigger a tax loss when you sell them to buy ETFs. Yeah. Okay. I hear a lot about drop shipping and TikTok shop integrations. People seem to be making good money. What's your take on it? Yeah, I'm a fan. It's actually not a bad side hustle. So Michael Dell kind of pioneered this sector back in the 1980s when he started Dell Incorporated. He started Dell out of his dorm room in Texas. And what he did was this. He collected cash, then built the computers, then shipped it. And that's something that Edward Deming kind of pioneered back in the 80s. It's called just-in-time manufacturing. A lot of Japanese companies did it too. So what have I done along those lines? Well, years ago, with my kids, we started a business. It was mainly that I was trying to teach them. And what we did was we bought and sold iPhone cases. And I'm going to show you exactly how we did it. Okay. So what we did was this. Okay. We went to AliExpress. Okay. It's owned by Alibaba. Then what we did was we searched for iPhone cases. And then we bought them for 99 cents each, right? Then what we did was we went to eBay.com. And then we sold the iPhone cases here. And I think back then we sold them for $9.99 each. Make sure it doesn't have an Apple logo on it. Buy the generic version for copyright reasons. That's what we did. Yeah. Okay. All right, next up, Jason. Jason wrote, I'd like to acquire a good cash flow business. Any advice on where to look for one? I came across some companies that provide the service, and they're very expensive. Do you suggest using them? Yeah, you can go to acquire.com, or you can go to bizbuysell.com. And let me show that to you here. Okay. All right, so let's go to let me spell it, bizbuy.sell.com. Yeah, this one's pretty good. They've had 100,000 successful exits here. You can check this out. Okay, and if you're about to buy a private company, what you have to do is you got to sign an NDA with them and hire an accountant to do a deep dive so you don't get screwed in buying a loser. Then what you have to also do is you have to write a business plan on that company as well. Okay, and you can use my business plan template here in my MBA degree program. Okay. Next question is, as somebody interested in investing in real estate alongside with stocks, who are the best people to reach out to and begin networking? It's a ghost town trying to reach out to agents. Yeah. So what I recommend doing is this, and this is what I did to buy this house, my previous house, and other houses. Go to a ton of open houses in the area, talk to a ton of real estate agents. Then what you're going to do is you're going to develop a relationship with them and tell them, I want you to introduce me to people that are selling before it goes in the market, before the open house. So for example, with this house here I bought in Hillsborough, California, back in 2014, what I did was I met with a great real estate agent named Phil Chen. And this is a separate entrance here, by the way. And I used to rent out this room. This was an Airbnb room to pay for the mortgage. You can see the crown molded. But I met with him, and I said to Phil, Phil, tell me if you know of any great houses coming on the market. And we found this house. And this house is incredible. And he showed me the day before the open house. I checked out this house, and it was unbelievably underpriced. And what I did was I made an offer that night. I told the agent, Phil, I will offer 10% above asking price, all cash. I don't know where I was going to get the cash from, but I managed to come up with it. All cash. But the stipulation is you have to cancel the open house tomorrow. And they did. Your network is your network. Relationships are more important than product knowledge. Now, in terms of how do you value a house before you buy it? Well, what you want to do is you can fill out my real estate template here, okay? So you're going to fill out, and this works in every country. This is one of the many houses I own up in Canada. What you're going to do is the best real estate investment, the ideal real estate investment is I for income, D for depreciation, E for equity, A for appreciation, L for leverage. Ask me questions about this if you want. You're going to answer tons and tons of questions. Then you're going to select the property you want to buy. Okay, the three most important things in real estate are location, location, location. And God bless my grandfather, he always used to say to me, Chrissy, buy land, they're not making it anymore. Then you want to value the house, okay, using 5 different valuation methodologies that I teach you in my MBA degree program, okay? And then once you fill out all these questions, what I do is I teach you about the math behind the mortgage, refinancing, everything from scratch, everything. Then I create your cash flow statement, your income statement right here as well. Okay, in case you want to rent out houses. And it's my dream that my clients make more money from their real estate rental properties within a decade than they do from their base salary. It's the best investment you can make is real estate, better than stocks, because you get the tax deduction as well. And there's a reason why the most successful people in the world own tons of real estate. I don't want to get political, but if you go back to the 2016 first televised debate between Hillary Clinton and Donald Trump, and I didn't vote in the last election, by the way, I'm a libertarian. But in that debate, Hillary Clinton said to Trump, it's not fair you're not paying taxes. And he said this, well, I don't really have to pay much in taxes because I own real estate and it gets used depreciation. The richest people on the planet pay less legally in taxes. Invest in real estate. Okay. So once you fill out all this information, I tell you all the ratios based on your net worth and all that stuff. Then you get a 1-page executive summary. And then you print out here a 27-page due diligence report. Failing to plan is plan to fail. So if you're interested in learning more about this, how to invest in real estate, etc., just set up a call with me. Go to the link in the chat you see. Okay. Manas, Happy New Year. Next question from Naveed is it a good time to accumulate Bitcoin, or shall I wait for further market declines? Yeah. So I think the relative strength index in Bitcoin right now is around 50 or so. I'd wait until the RSI is around 20 or 30. Always tell yourself you can buy it cheaper. Now, my long-term target price on Bitcoin is $1 million per coin, and I'll explain my methodology on how I got to that target price in a second. But you want to wait until it's massively oversold. It's not oversold right now. Let me show you. So let's go here, as always, to Yahoo Finance. Whoops. And let's type in BTC, ticker for Bitcoin. And what we're going to do is we're going to pull up a chart here. All right, let's look at the chat, as they say in Boston. Okay, here we go. All right, so as you can see, the RSI is around 52. I'd probably wait until it dips down to 20 or 30, like it did when it was like 84,000 per coin back in November. Yeah, just be patient. Just be patient. I mean, look what happens if you chase it as well. I mean, Bitcoin had a max of, I think it was 126,000 last year. But look at this here. You see this here, man? Look at this. Right here, the RSI was close to 80. That's not when you buy. You want to buy when other people are freaking out. I want you to always be patient, right? And one of my heroes in life, as a humble and proud Canadian, is Wayne Gretzky. And Wayne Gretzky said, he said he was successful humbly, not because he's skated to where the puck is, but rather because he's skated to where the puck is going to be. And by the same token, I don't want you to buy stocks or investments when everybody loves them. I want you to buy them when people are going to like them. Buy stocks that people are going to like. And that comes back to FOMO, fear of missing out. Be patient. You can always buy it cheaper. Now, I'm going to justify my $1 million price target for Bitcoin. Okay, I don't know the path. I don't really care. I know the destination. So here's how I get there. This is the worst investment you can ever make. I'm a loser for owning this because I could be making more money by investing in other assets. Now, since COVID, the United States government has printed close to 50% more of this stuff. So if supply increases a lot, prices are going to go down, right? It's a loser investment. Okay. Now, as of today, there's about, I think it's 92 trillion M2 or amount of cash out there, okay? Or 96 trillion, I should say, okay? I think that's going to increase by about 5% per year over the next 20 years. That will get us to $250 trillion in cash in about 20 years. Now, as of today, 2 or 3% of the 96 trillion in cash is in cryptos. I think it's going to get to 10 to 20% in 20 years. So right now, Bitcoin has a market cap of about $25 billion. I think that 10% of all cash in 20 years, market cap wise, will be Bitcoin. And that gets me a target price of $250 trillion for Bitcoin, which justifies that $1 million per coin price. 25 billion, 2.5 trillion, I should say. Yeah. It's fun doing these things live. All right. All right, next question is, can you tell me more about the time the United States government banned shorting stocks in 2008, if you can talk about it? Absolutely. Absolutely. I ran my hedge fund then. I was massively short the markets. Humbly did well. It was depressing, though, because every day I came in hoping for bad news. So I believe it was late September of 2008, after Lehman Brothers went belly up. The United States government made it against the law to short 799 stocks, including the financial services companies, Fannie Mae, Freddie, as well as General Electric, General Motors, etc. And they thought by banning shorting that would cause the market to go up. Initially, it went up 8% one day on a Friday in late September. Then the market crashed. And then by October, they said, okay, we're taking this off now. We're no longer going to make it against the law to short these 799 stocks. And I remember what I did in my hedge fund at the time. The second that news came out, our gut reaction was, do we cover our shorts? We said no. And the reason we said no is because we won't be able to put on new shorts then. So we kept those shorts on. Yeah. So anyway, that happened. I think it was October 8th, 2008, when the government got rid of that regulation. Yeah. Those are interesting times. Okay. And if you want to learn more about that, I have a number of vlogs on that topic where I cover 3 of the best movies ever made that discuss 2008 as follows. Number 1, The Big Short, which is 2008 from the perspective of a hedge fund. Then you have Margin Call, which is 2008 from the perspective of an investment bank, Lehman Brothers in that case. And then my favorite one called Too Big to Fail, which is the 2008 crisis from the perspective of the U.S. government. Yeah, and if you're curious about the next vlog I'm making, I think tomorrow or the day after, I'm releasing Billions Series 3, Episode 10. That'll be my 34th vlog on a Billions episode. And then next week or the week after, I'm doing The Social Network, as they're making part 2 of this. Yeah, it's fun. I also, I vlog daily. I have daily market shorts on YouTube as well, right? Just quick 2-minute recaps of each day's trading. All right, next question is, how do you deal with being scared and skeptical at the same time when you see so many people being laid off in 2025 due to AI and cost cutting? What is the future looking like and how? Yeah. I know it's scary, but what I want you to do is I want you to disrupt yourself. Whatever it is you guys do, especially if it's repetitive stuff, I want you to use AI to work smarter, not harder, be 10 times more productive so you don't lose your job. And I want you to think about it as, we'll talk about DVDs. So back in the early 2000s, Netflix was a DVD rental company. And you get the DVDs in the mail. And then Reed Hastings, the brilliant founder of Netflix, realized, oh my gosh, in 5 years we're dead because of streaming. So he disrupted his business model and started offering streaming. And Wall Street hated it initially. I loved it though. And so you got to disrupt yourself the same way. And before you invest in any company or do anything yourself, always ask yourself this basic question. In 5 years, will this company or this job or whatever it is I do be more relevant or less relevant than it is today? Disrupt yourself before the marketplace does. Now, I know many of you are worried about AI and the impact on your job. And Jensen Huang, the brilliant CEO and founder of Netflix, said this: don't study computer science because AI can do that. And I'm seeing here in the Bay Area, I'm right in the front lines here. I'm seeing a lot of firms like Meta, Amazon, all these great companies here that have offices are laying off thousands of people that are entry-level developers. Don't study computer science, please. So what is AI proof then? Well, I think sales is. Because we don't trust AI when it comes to sales. And I'm talking about direct sales. Yeah. So if you work in a company right now and you're in sales, and you're about to get promoted to management where you're no longer in sales, don't do it unless you can keep some of those clients with you. Yeah. Okay. And I think one of the best jobs you guys can get in financial services is private wealth management, meaning a stockbroker for rich people. And the reason I say that is because it's very sad, but the next 20 years, we're going to see the biggest generational transfer of wealth in history as the baby boomers move on. Money management's a big business. It's going to be much, much bigger as well. And we don't trust AI for that. We trust the traditional grip and grin. Yeah. Okay. And also, guys, look, I don't want you to be worried about career stuff. Just work your ass off, man. You'll be fine. And what I'm about to say is going to be controversial for some of you, but I don't care. This is me. This is who I am. I don't worry about business. I work hard, but I don't worry because I tell myself God always knows what's going to happen. I know it's a weird thing to say, but think about all the times in your life you freaked out and you aged and you got sick because you freaked out for stuff that never occurred. And Sir Winston Churchill met a man on his deathbed who once said, I met a man on his deathbed who talked about all the worries he had in his life, none of which came true. Don't worry. Yeah, just work hard. Okay. All right. People say, Chris, you're naively positive. It's just who I am, eh? Okay, give me a second here to get the next question. Are there any investment or business opportunities that are particularly unique for the start of a new year in early January when people are coming back from their holiday breaks? Yeah. A lot of people look at retail stocks closely. And retail companies have their fiscal year end in January, not December, to account for returns. So a lot of people look at retail. In terms of investment themes, I don't tend to think short-term, I think long-term. Yeah. Why does it make sense to write goals and 10-year resume if it actually builds nice soft pressure on oneself? Yeah. So in my MBA degree program, I have all my students create a 10-year resume, meaning what is your resume going to be in 10 years? And I want you all to do that as well. And the reason I want you to do that is I learned from Jeff Bezos that if you think long-term, you can be very successful. Now, Jeff Bezos, what he did at Amazon for many years when he was running the company, okay, what he used to do is he would get all of his product managers, all of them, including product managers on Kindle, AWS, Whole Paycheck, meaning Whole Foods, etc. What he would do what he would do is he would get them to write a press release today that's going to be released in like 10 years. And then you focus on filling the gap. How do you get there? And that's why I recommend everybody write their resume today, what I call your simple perfect resume in 10 years today. I want you to be long-term focused. The longer the view, the wiser the intention. And Mark Benioff said it best. Smart guy, I met him a number of times. He's the founder of Salesforce.com. He said, we tend to overestimate what we can accomplish in a year, but we massively underestimate what we can accomplish in a decade. The longer view, the wiser the intention. Yeah. And there are some of you out there that are frustrated because you're not getting, you don't feel like you're accomplishing anything in life. And I want to do something a little silly here. When you first set out on a goal, okay, your goal is the top of the mountain. There it is. I see it. I'm excited. Let's get this journey started. And you're excited because you're working on this journey and the top of the mountain's getting bigger as you're getting closer to it. And then what happens is you get really excited. You start walking faster. Oh my God, the top of the mountain's getting bigger. It's getting bigger. There's my goal. It's in sight. Then all of a sudden, you get frustrated. You can't see them. Where the fuck did the top of the mountain go? And you're meandering this way and that way and kind of sitting still, and you quit. Don't quit. The reason you can't see the top of the mountain, which is a metaphor for your goal, is because you're halfway up the mountain. You can't see it. And so I want you all to share with me right now your New Year's resolutions and deadline dates. Yeah. And if there's anybody in your life, friends, colleagues, family members even, that bring you down, that hurt your confidence, cut them off. They don't belong in your life. Yeah. The power of positive thinking. All right, next question is, do you think video editors will be more or less needed in the day of AI editing? Yeah, so if we talk about my 5-year outlook, 5 years, will this sector be more relevant or less relevant? I'd say less relevant. Yeah. I use a lot of AI tools right now to help me with video editing, so I don't have to pay my editors as much anymore. Yeah. What are the various ways your program helps startup founders succeed? Yeah. So every second you spent managing a business or a startup, every second you spend not focusing on immediate revenue growth is a waste of time. The best skill you can learn in business is networking and sales, and I will help you do that. I've humbly raised and managed over $1 billion in my career. Yeah, I made a lot of mistakes, but I'm humbly very good. That's a Canadian bragging. Humbly very good at selling. I will help you sell. You got to spend every second selling, and you got to tell yourself every single day, every second you spend every day, not laser focus on selling is a waste of time. In order to make CEO of a company, you're a salesperson. In order to make partner in a law firm or a venture capital firm or an investment bank, a partner is a euphemism for a salesperson. Always be selling. Always. And great entrepreneurs are great salespeople too. Elon Musk, for example. Yeah. And so I teach you a lot of ways to use social media products in order to sell. Yeah. And much more as well. And I've got that venture capital bootcamp as well in my MBA degree program. And if you want to learn more, just click on the link there in the chat, set up a call with me. It's not with anybody on my team, it's with me. Yeah. I love what I do. Okay. What is the best way to find a co-founder or effective low-cost contractors for project-based work? Yeah. So I run an S1, I don't believe in LLCs. I believe in S Corps. I run an S Corp, not an S1. And so I don't have full-time employees. I have contractors all over the world. So how do you find them? Well, you can go to Upwork. You can go to Fiverr.com as well if you want to. Now, if you want to find a co-founder, what I recommend doing is going to meetup events, which are free. And I'll show you how to do it in a second. But you need to decide, are you a Steve Jobs or a Steve Wozniak? Okay, and so Jobs was great at sales, but not tech. He wasn't a techie. Wozniak was. And so that was completely yin-yang. He found his techie. I want you to find your Woz or your Jobs. How do you do that? Well, one way you can do it is you can go to a website called meetup.com. Meetup.com. It's free to use. And you can go to events online if you want to. So you type here Saudi Arabia. Whoops. I was going to type Riyadh. Okay, fuck it. I'll try to type Riyadh. I don't know how to spell it. Or I'm such an idiot. Okay. I will type Athens. So let's say you're in Athens, Greece, and you want to find somebody to be your co-founder, and I don't know, you've got a crypto company. You search here for crypto events, and then you can go to meetups for crypto stuff. Open Coffee Athens, okay? So you go in person to this coffee thing, it's free, or you go, you do it over Zoom here as well. Okay, I really butchered that, but go to meetup.com, do a search, you'll find it there. Okay. To get into a hedge fund industry, what path should I take? Yeah. So every time you want to get a job in high finance, okay, and you see a job opening and you apply, you have a 1 in 250 chance getting that job. So who gets the job? It's the people that know people at that company. How do you do that? Sign up for my program if you want, or somebody else's program. Step 1, I'll make your LinkedIn profile. Step 2, I'll help you write articles every week or every month on your LinkedIn profile to help you with social proof so people take you seriously. Step 3, most importantly, I'll help you to reach out to people and set up informational meetings. Now, in those informational meetings, you want to pitch stocks to them, investment ideas. How do you do that? Well, by law, if you manage over $100 million, like a hedge fund does, every 3 months you have to file what's called a 13F on SEC.gov. And what that means is you have to disclose what you own. So do investment write-ups on those positions and show those investment write-ups to those people when you set up the informational meetings. So in terms of preparing for a finance interview, and I've conducted, humbly, over 1,000 finance interviews in my career. It's an average of 1 per week over 20 years. I'm dating myself. I worked at Goldman, Citadel, a bunch of other hedge funds as well, start my own. And what I did was I put this together here, okay? And this is a 150-page exercise document on how to ace your finance interviews. I teach you every question they could possibly ask you. If you're interested in learning more about that, just click on the link in the description, set up a Zoom call with me. Yeah. Okay. Meta's AI strategy is likely to create shareholder value. What is your opinion? Yeah, I'm bullish on Meta longer term. Why? Because the founders still run the company, right? I don't look at companies to say, I want to invest in that company. I look at the management team, the CEO. And if he or she is the founder and I love them, I invest. What will make me incredibly less bullish on Meta is if Zuck ever stepped aside. Yeah. Okay. As a student, how should I get into the hedge fund industry? What path should I take? Okay, you wrote that question twice. Yeah. How do you decide not to invest when a great company becomes permanently impaired? In other words, what concrete signals tell you that buy the dip it no longer applies? Yeah. So in the tech sector, when a company starts becoming a little bit less relevant, it's game over. 99% of turnarounds do not work in tech. It's the way it works. Yeah. And also, you got to create your 5-year model, okay? And don't get seduced into buying value traps, meaning stocks that are cheap for a reason. Yeah. Okay. If the S&P 500 earnings are going to grow 15%, or the S&P 500 index 15% over time, yeah, then it means there are companies that will grow with more. Yeah, absolutely. That's just the average. Yeah. And the 500 companies in the S&P 500 just represent the U.S. economy. Yeah. What is the point of owning companies that will never fail, like J.P. Morgan or Lockheed Martin or Goldman Sachs, instead of the S&P 500? Yeah, that's a great question. Yeah. So when you look at companies to invest in, you got to always ask yourself, will this company exist in the long run? So will the United States government ever let J.P. Morgan go belly up? No. Will the United States government ever let Lockheed Martin, ticker LMT, go belly up? No. Then do you believe in the company longer term? Yes. Do your research. That's a great way to think about investing for the long term. Yeah. Yeah, in terms, should I buy an ETF instead of single stocks? Yeah. So my humble opinion is the S&P 500 ETF, on average, will be up 15% per year, forever. Now, if you do investment research on a stock and you see 10 to 15% upside, I don't think it's worth investing. Just buy the S&P. And so when you do investment research, what I like to do is this. I like to look for companies that are a 5 by 5. What does that mean? I like to identify companies that I humbly believe have a 500% return within 5 years. Then I do the research, do my full 100-step report, and then I invest. And I never sell. Unless the thesis changes. Yeah. Am I wrong with my 5 by 5s? All the time. But if I'm a little bit right, I do well. And I humbly have. Yeah. As a student, okay, you wrote the same question 3 times. Okay. As you see, I don't pre-screen questions, I just read them. All right, next question is, thank you for your continued guidance. You're most welcome. Thanks for being here. Your daily videos are phenomenal. Thank you. I appreciate that. Yeah. How is your health routine these days? Yeah. So a couple things. Number one, I'll tell you what's changed. And many of you have heard me over the years talk about my process of bulletproof coffee first thing in the morning. Drink one of these things all day. Vodka makes me feel good. I'm just kidding. I don't drink anymore. I don't drink any less. And every Sunday I set up greatest hits of antioxidants, things like this, 7 of them for the week. But what has changed is this. Okay. So I just bought a product, because I'm a nerd, called 8 Sleep. And it's a special bed that I use that will levitate and change temperature a bit over the course of the night based on my heart rate, based on my snoring, and then based on whether the fact I'm in deep sleep mode or REM mode. So that's one thing I've changed. It's called 8 Sleep. Another thing I've changed is I ordered a sauna for my house. Comes in June. It's being made right now. But I go to a sauna place here in San Mateo 3 times per week. And that helps me to sleep much, much better. And I do it for 45 minutes, okay, at 150 degrees. Another thing I do 3 times per week is I do lymphatic draining. And it's a machine that vibrates, kind of like Richard Nixon, who said, "I'm not a criminal." Sorry. It's a machine that vibrates for about 15 minutes with red light therapy. And lymphatic draining is great. And the best way to explain it, because I just started understanding it recently, is your body has a river in it. And the river gets rid of toxins. And lymphatic draining, those vibrating machines, gets rid of those toxins as well. I'm already feeling I have a lot more energy now. Yeah. Okay. All right. If the index can give us 15%, the S&P 500 on average, and there will be down years, then what is the point of algo and quant? Because our models get old very quick, way too soon. Yeah, most of them never work. Yeah. The only one that really does is Renaissance Technologies. Yeah, and I can talk about that hedge fund in more detail if you want me to. Yeah. How does your program apply to legacy businesses, particularly manufacturing in the United States? I own a foundry machine shop, and I'm actively seeking investors. Yeah, my program is generic enough to apply to any type of company in any country. I have over 2 million paying students in every country. Yeah, set up a call with me, and I'll tell you more about it. Yeah. Speaking of Renaissance Technology has an average trade day of 2 days. And they keep stock for that numbers, yada, yada, yada. Yeah. So nobody knows exactly how Renaissance Technology works. So Renaissance Technologies was founded by a brilliant man, the late, great Jim Simmons, back in the early 1980s. He came out of the NSA. And he started Renaissance, which is a tech-based AI hedge fund. And nobody knows how it works. They have thousands of Linux servers running in parallel. And they've made, I think, 60% average returns for 20 years straight. And what happens, and I'm really going to dumb this down for my purposes, is you have a lot of inputs, and then the outputs pick stocks. So for example, if it's raining a lot, that's an input, then we don't go out to eat at restaurants, therefore short restaurant stocks. Nobody knows what's in those black box Linux servers running in parallel. Yeah. When modeling revenue for 5 or 10 years in the financial model, what is your assumed revenue growth for all these years? Is it accelerating or stable or what? No. So for private companies, I'll explain the way it works. So for private companies that are venture capital backed, okay, for the most part, revenue growth is accelerating. The second revenue growth is positive but decelerating, then the venture capitalists call their investment banking buddies in New York and say, hey, take it public. Now, almost all companies that are publicly traded that have positive revenue growth have decelerating revenue growth. Look it up, okay? It's just the way it works. And if you ever see accelerating revenue growth for a company, oh my God, that'd be an incredible investment. But you got to do your due diligence because accelerating revenue growth could be due to the fact they made an acquisition. So you got to look for organic growth. In fact, whenever you analyze any company, always look at organic year-over-year growth. And every sector is a bit different. So for example, for Starbucks, ticker SBUX, or Lululemon, ticker LU, you always look, retail companies, you always look at what's called SSS, same store sales. We want to look at how does revenue grow each year for each store. The same thing with hotels. You got to look at what's something called RevPAR, revenue per available room. What is the average hotel room growing revenue-wise year over year? And when it comes to cell phones, same thing. You look at ARPU, meaning average revenue per unit. The bottom line is you always want to look at organic revenue growth for all companies. Yeah. Why do most college students want to work in private equity, hedge funds, venture capital, and investment banking, but not mutual funds? Yeah. And I said wanking because I'm 7.5. Sorry. I think a lot of people are seduced by the money. Yeah, mutual funds, you don't make as much money as if you work at a hedge fund. You make more money. Yeah. Now, a lot of my students, and myself included, when I was an undergrad, a lot of fine students, they want to work in investment banking. And they don't know why, they just do. And there's an insecurity there, to be intellectually honest. And they want to work in investment banking because they're like, oh my God, I'll make way more money than my peers. The reality is this, though. You probably make the same amount of money per hour as your peers do, but you sacrifice your health. Yeah. But if you're confused in terms of what to do in life, investment banking or consulting is not a bad idea initially. And here's why. They're both what I refer to as origination jobs. Let me explain quickly. In investment banking, what you do is you originate the IPO. Okay, you originate that product. In consulting, like working at McKinsey or Accenture where I used to work, you originate the corporate strategy. So in both cases, you're originating a product. Now, if you absolutely hate that job, that's okay. And here's why. Because you originated that product, you can then move on, because you thoroughly understand it, to another role where you sell or market that product. Or you do general, management on that product, or start your own company doing that product. Hopefully that makes sense. So for example, in investment banking, you originate a product, you hate it. Hey, that's cool. You can always go on to sell or trade that product or invest in that product through private equity, hedge funds, venture capital, etc. But please never, ever work in venture capital unless you started companies. And I can tell you why if you want me to. Just ask me. Okay. Okay, Jiaming, how are you? Jiaming is in my Accelerator MBA program. Good to see you, where he gets daily calls with me. Yeah. So Jiaming wrote, when the growing stock transitions to value, will the trading volume increase, signal that value investors are starting to buy it? Yes, it could. Let me explain. So a company is either a growth investment or a value investment. And investors, you're either a growth investor, meaning you like to buy expensive stuff that's growing fast, or you're a value investor like Mr. Buffett. You like to buy stuff that's cheap. But you're not in the middle. And it's very, very dangerous to invest in a company that is transitioning from growth to value, because we don't know when value investors are going to start to buy. And through that transition, growth investors are selling. It's stuck in investment purgatory. Very dangerous. But once you figure out that value investors are starting to buy, then that could be a frickin' home run. Let me give you an example. So Warren Buffett's portfolio, Berkshire Hathaway, recently disclosed a new position in Google. That's a huge deal. So is Google a value investment now? Oh, wow. And if you look at their latest 13F, the only new position they added was Google. And they put $4 billion into Google. Seems like a lot. It's not. Because right now, Berkshire Hathaway is sitting on a record $358 billion of cash. Do the research on Google. It could be a home run. Okay. My New Year's resolution. Oh, good. Please share this with me, guys. Excellent. So Peter wrote, finish up the FinTech Industry Professional Certification I started at CFI last April. I got stuck last year. Time to get back into it. Awesome. Thank you for sharing that. Everybody else, share with me your New Year's resolutions, please. And tell your friends, too. The reason you got to tell your friends is because every time they see you, they'll say, so how's that resolution coming along? So for me, when I wrote my first book, and I can give you guys the template for this as well if you want to write your own book. It's free to do, right? But when I wrote my first book, I started in 2013, and I told my family about it. And, every Thanksgiving, my mom would say to me, how's that book coming along? I was like, oh, God, now I got to get it done. Yeah. So I set a deadline date eventually. Yeah. And I want you all to write a book as well. I'm going to give you this template, and I'll paste it in the chat right now to write a book. So here's what I want you to do. I want you to repurpose content, kind of like Gary Vaynerchuk talks about. What does that mean? And this will help your career, okay? Step one. This is exactly what I did. Every week, write an article on LinkedIn, okay? And I did that. I wrote 101 articles over about 2 years. Then what I want you to do is repurpose that content into a book. What chapters do you put first, though? The LinkedIn articles that got the most views, shares, comments, etc. So how do you publish a book then for free? Well, here's a template, and I will drop this in the chat as well. So what you're going to do is you're going to go to harounmba.com/writebook, all one word. Let me copy this and put this in the chat right here. Done. Good. So what you're going to do is you're going to click here. I don't ask for your email or nothing. And there's one page of instructions. You're going to fill this out, and then you're going to publish it. The one page of instructions right here, it's really, really easy. Okay, you download a Word document. I tell you how to publish on KDP, that's Kindle Direct Press, how to publish on Amazon Print, meaning CreateSpace, and then how to publish on audible.com. And then you can hire my favorite person from Bangladesh right here to do the cover of the book. Okay, so that's it. You fill out the template, then you right-click, you repaginate, and you're done. And then when you go to informational meetings or your interviews, you give them this book. Or you apply to university, you give them this book. Okay? When you go to a potential client meeting, you give them this book. And if you think it's too much work, and I say this with love of my heart, then I ask you this. How badly do you want that job or customer, etc.? Then what you can do is what I've done, which is you can publish books. And all this is about 10 years ago, I made a course on something like how to get a job. And I exported the closed caption files. And I threw it together in a book. I repurposed it. And so what I do, and you've noticed this as well, and I don't do it as much anymore because people complain I'm overdoing it. Sorry. But I mentioned go to my website, download this book, and then you collect emails. And email is still the gold standard for building a business. Yeah. Okay. What is the best source of protein you recommend without synthetic protein like whey? Eggs, without a doubt. Yeah. And every week I order from Whole Paycheck, Whole Foods, hard-boiled eggs. Yeah. Organic, of course. Okay. Can you elaborate what common ground I have with a person I'm reaching out to as a Purdue accounting student? Yeah. So earlier on, I mentioned setting up informational meetings. You want to find people who have something in common with you. Maybe they went to the same high school as you, and they also went to Purdue, and they work in a company you want to work at. Yeah. And you're a premium student. So today at 10 a.m., what I'll do is ask me that question. I'll go through your LinkedIn profile and give you plenty of examples as well. And for those that want to become a premium student, it includes 300 hours per year of daily group Zoom meetings, okay, very small group Zoom meetings, and every Monday, Tuesday, Wednesday, Thursday, Friday, at least an hour a day, 300 hours per year. Yeah. And then just set up a call with me if you guys want to learn more. Okay. All right. Should I be worried about the next decade or so because I see too much uncertainty around pessimism about hiring, optimistic about firing? Yeah. So the only thing you can do is think about running your own company. And if anybody watching this webcast works for somebody else right now, I want you to start a side hustle. I want you to write tons of business plans. Let me help you do that as well. And the reason I say that is, and I'm going to swear here, so earmuffs, so sorry, as I say in Canada. There's nothing worse than spending the rest of your life being someone else's bitch. I don't want you to wake up one day when you're 80 and say, damn it, I wish I'd started my own company. Or worse, I don't want you to wake up one day and you're older and you realize that you're working for a schmuck that pays you this much money to make his dreams become a reality. I had my employees over at my house recently. This is a joke, but I'm going there anyway. And I took my top sales rep. And I said, Johnny, you're doing a great job. Johnny, you see my Mercedes right here? Do you see this? If you work really, really hard in the next 12 months, really hard, then I will buy myself another one. Okay. That was bad humor. Sorry. How does living with the limiting belief lead to long run, and how to break these invisible walls forever to reach full potential? Yeah. So I love to teach with props. I think everybody should have this in their office, right? You can buy smaller ones too. Okay. This is the Rodin sculpture. I think, therefore I am. You, meaning me, all of us, we are always our own biggest enemies. Perception becomes reality. I think, therefore I am. Okay. So eliminate, no more fucking self-sabotage this year, guys. Okay. And I say it with love in my heart. I'm going to show you a chart. I've done this before, but this is life-changing. Hold on a second. Alrighty. And I know I've shown this before, but it's so important to go over it again. Let me get my prop. I am a small man if you meet me in real life. All right. X-axis is your age. Y-axis is give a damn. When you're younger down here, like when my kids were younger, you have meltdowns in restaurants. You don't give a darn what people think of you. When you're older, like me, old people don't have confidence problems. We don't really care. Sort of. The problem is when you're right here, when you're teenagers, 20s, 30s, 40s, whatever, you're up here. You care what people think. This is a dangerous fucking place to live, guys. I'm sorry for swearing, but I care. I want you to eliminate this triangle of despair. I want you to live at this level in 2026, like all the best entrepreneurs do. You know, Elon Musk, Oprah Winfrey, all the greats. They don't care what people think. They fail over and over and over again. I'll give you an exercise in a second, okay? All right. But I want you to think like the greatest basketball player of all time, Michael Jordan. It's not LeBron James, folks, okay? Kids. All right. And Jordan said, I failed over and over again in my life. Focus on my face. And that's why I succeed. No fear of failure in 2026. Because as Mark Cuban said, you only have to be right in business one time. We do not fear failure. Okay? All right. So here's the exercise. Everybody gets a piece of paper and a pen. And if you've done this exercise with me before, I don't care. Do it again because I care. I don't care what people think of X. Again, I don't care what people think of X. Then fill in the blank for X 10 times. For example, I don't care if people judge me for the size of my nose and the fact that I run out of this powder stuff every day because of it. Yeah. I don't care that I have a bald spot right there. Let me fix that up there. Yeah. I don't care that people find out that I'm a 53-year-old man-child and I play video games. I don't care that when GTA 6 comes out in November, if ever, that people find out that I ain't doing this weekly webcast for a month. So I'm be playing. I don't care that when I go to parties, people don't talk to me as much as they used to when I worked in venture capital because I'm a teacher. And they say those who can't do, teach. And those who can't teach, teach gym class. And you know that's true. I'm just kidding about that. Those who can't do, teach thing. Yeah. This is the year of not caring and taking risks. Is insecurity and fear a human feature or a bug that's installed later in our software? Whoa, that was deep. Yeah. Okay. I'm going to ask you guys a question, and I know the answer for most of you. 2 questions. Number 1, do you believe in God? This is where people drop off the webcast, but I don't care. This is me. So number 1, do you believe in God? Yes, good. Number 2, does God believe in you? Yes. Well, if you don't believe in yourself, you might have to question your faith. And we're never going to do that. Whoa, that was deep. I think it's disrespectful to our Maker, to God, to not believe in yourself. Don't worry, man. Things are never as bad as you think they are. Don't worry about the past. You can't control it. Work hard and you can control the future. Don't worry. All right, Andre, how are you? Wrote, good morning, happy new year. Great to see you as well. Andre wrote, what time does the MBA live chat start? Yeah. So my MBA students get access to the daily calls. It'll start, I think, at 10 a.m. Your time, using the Zoom link you were provided with. Yeah. Okay. Why do so many hedge fund managers start their funds in their late 40s and 50s? Why not 20s or 30s, or why wait? Yeah, that's not true. A lot of them start actually in their 30s. Yeah. So they spend, 5-10 years at a hedge fund, get a track record, then they start. Yeah. But most don't start in their 20s. You got to have a track record first. Yeah. All right. Next question is, I just graduated from college. I'm not doing a job. I'm not an expert at anything. How should I start networking with people I don't have any value for them to offer? Yeah. Okay. So here's what I want you to think about. Okay. And I'm going to make some stuff up here. Bear with me. Let's imagine it's 20 years in the future. You're way more successful than you already are today. And somebody reaches out to you on LinkedIn and sends you an email. And in the email, it says this: John, hope all is well. I also went to the same high school as you, XYZ High School, and the same university as you, XYZ. And I'm from the same hometown. Please let me know if you have time for a quick Zoom call. Thanks a lot, Jennifer. Would you say yes or no to that? You'd say yes. That's what I want you to do. So I want you to set up that informational meeting. And I want you to bond before business. Talk about what you have in common at first. And then say something like this if true. I would love to get a job in your industry, and I just love to hear about your story and how did you do it? Yada, yada, yada. Let them talk and say, can you please give me a chance? Are you hiring? If not, do you know anybody else that also went to our school you could please introduce me to that might be hiring? Networking is like dating, okay? If you ask 3 people out in a date and they say no, does that mean you're never going to get married? Oh, heck no. If I told you that if you asked 99 supermodels out in a date and the 100th would say yes, would you do it? Of course you would. It all comes down to the concept of pain and pleasure. Okay, I ask her out on a date. She says no. Pain. Second person, pain, pain, pain. 100th person, yes. Pleasure for life. Don't be afraid to take risks. Do you think jobs will beat college degrees with now humanoids made to do even more of the blue-collar work? I mean, I think anything repetitive will be replaced by AI in the long run. But I really think that my kids are like the last generation that think, should I go to university? Yeah. So these 2 are in university. This guy's in high school. He's 16 going on 40. Yeah. But don't feel that just because you don't have a university degree that you're done. University system is rigged. It's bullshit. When I went to school, there were so many people I went to school with whose parents were wealthy, who went to the school or donated to the school. The system is rigged. And everybody knows it. You don't need a degree to be successful. The only reason you should get a degree if it's a professional thing, like, I don't know, you want to be a doctor or something. Otherwise, you don't need that. Yeah. And that's why I do what I do. And that's why my MBA program will never be accredited. I let anybody in. Yeah. I don't want no government telling me what I can and can't teach. Okay. Is AI being pushed? Hold on one second. It jumped on me. Here it is. Is AI being pushed in way too much in almost every space? Also, is the bubble still alive? Yeah, we're definitely in an AI bubble. I think we'll get sector rotation maybe out of tech and energy this year. Select energy stocks. Yeah. Yeah. All right. But it's human nature to drive up the next new shiny toy. And bubbles, markets peak, markets drop, bubbles burst, but nobody knows when. You can't time these things. And I remember many years ago, I worked at a hedge fund called Pequod. And a bunch of us pitched a short to Art Sandberg, the late great founder. He died of pancreatic cancer, I think 2 years ago. God bless him, I miss him. And Pequod was the biggest tech hedge fund on the planet. Yeah. But they also did cyclical stuff. And so one of my buddies, I think maybe I might have been a part of that, pitched Lennar as a short, ticker LEN. And that was in like July of 2006. And our thesis was, there's a housing bubble and the market's going to pop. And he stopped us throughout our thesis and said, son, I'm going to stop you right there, Heisman. I'm going to stop you right there. Because I've learned in my life never to stand in the way of insanity. Markets peak, markets trough, you just can't time it. And usually what causes these bubbles to burst is something you can't forecast, like a black swan event. Like one country invades another. You can't forecast that. Nobody could have forecasted COVID. Nobody could have forecast 9/11, etc. You can't forecast that stuff. But if you bought the worst stocks, for the most part, in 2007, and you lost tons of money in 2008, you'd still be up huge today. If you bought real estate at the peak in 07 and lost a lot in 08, you'd still be up today. And if you bought Coca-Cola day one of the IPO, a year later, you'd be down 50%. But today, of course, you'd be up a lot more. Just be long-term focused. All right. Okay. Faggy wrote, hi, Chris. Hey. More of a career question for you. Sure. I've been in a position for about 3.5 years. I was working with my manager to work on a promotion, but he got let go. Should I still try to hold my job? Yeah. It's rough. It's rough. You got to have multiple mentors in your company, just in case that happens. Yeah. Establish a relationship with your next manager. Stick it out, but always be looking on the side. Always. And whenever you get calls from headhunters or inbounds, always take those calls, right? Don't be loyal to anybody. You be loyal to your family first, then the company second, of course. But here's what I want you to do. And I'm going to answer this generically to help everybody get a promotion or a raise. Ready? Here's how you do it. Let's say your boss just came up to you at some point this year and says, great job on whatever. They're in a good mood. You immediately say, thank you. Do you have time for a coffee? And then in that coffee meeting, I want you to say exactly this if true. I love being a part of the company. We've accomplished a lot as a team, and I know we're going to accomplish a lot more. And as you know, it's very expensive to raise a family here in the Bay Area, and I want to provide the best standard of living I possibly can for my children. As such, I'd love to ask you, please, to let me know what additional value I need to add to the team in order to be considered for a raise or a promotion. Thank you. Okay, and then you bring your notebook and you write everything down. So say they give you 5 criteria, right? So you thank them. At the end of the meeting, if you're in a coffee shop and you paid for a coffee, you have to do this when the bill comes. I have alligator hands. I can't find my wallet. And T-Rex can't do push-ups. Sorry. Then what you're going to do is this. 3 or 6 months down the road, once your boss congratulates you again on a job well done, what I want you to do is I want you to say, you rinse, lather, repeat. Do you have time for a coffee? And you sit down in the coffee meeting and, you start off with the same spiel of, I love being here. We've accomplished a lot, yada, 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 as a team. Last time we spoke, I'd mentioned, and thanks for your time, that raising a family here in the Bay Area is very expensive, and I want to provide the best standard of living I can for my kids. And you provided me with 5 things I need to know, accomplish, or value I need to add to the team in order to get considered for promotion. Well, I'm very humbled to say that I've accomplished all 5 of these. And so I'd like to ask you, please, for a promotion or a raise, whatever it is. This is how people get promoted. This is how people make manager, vice president, partner, whatever it is. You don't see it, though. They ask behind closed doors. It's always how it works. And the thing is, like, people ask multiple times, right? Asking you'll receive. It's prophetic, it's the truth, it's the beginning of time. Keep asking for that raise or promotion, but do it in the methodology using the method I just provided you with, that framework, okay? It works. And if you look around your company and you realized other people are getting raises or promotion faster than I am, the reason is because behind closed doors, they asked. They asked over and over and over again. You just don't know that. You can't see that because they're talking behind closed doors. It's like when you're a kid, like my kids, they were relentless. They would keep asking. Like my son would say when he was 14, he'd say, "Can I drive?" And I'd say no. He'd wait 3 seconds. He'd say, "How about now?" I'm like, "No." But he kept asking over and over again. Or when they're 2, they're like, "Can I have candy?" No. They're relentless. They're like a pit bull on a pork chop. You got to ask. And for those of you that got great grades in school and now you're working with people who make more money than you, here's why. When you were younger, you're in high school, whatever, you're working hard, keep your head down, get good grades, your parents are proud of you, teachers are nice, life is good. Then you join the workforce. And you work very hard, you keep your head down, yada, yada. You think, okay, good, I'm going to get noticed and I'll get promoted and raises. And a couple of years go by and you look around and you're like, WTF, why the face? People are getting raises and promotions faster than me, but I'm better than they are. I'm adding more value. What is going on? Because they're asking. You have to ask over and over again. Yeah. Okay. All right, let's do a couple more questions. I think I'll wrap up today's call. You see, there's a bunch more though. Okay. Where do you think marketing is going to go in the next few years? I think you have a couple years, and I say this to everybody in this call. You have a couple of years to start your YouTube channel, your TikTok channel, Instagram video, whatever it is. Then it's going to be too late because avatars will take over. Start right now. And don't strive for perfection. Just get your stuff out there. It's life-changing, I promise you. Help people. If you don't, in a couple of years when AGI, meaning artificial general intelligence, becomes a reality, you won't be able to do it. Just like in a couple of years, a lot of famous actors will be replaced by AI. I say a couple decades. And YouTube is the best gold rush in history because it's the only gold rush. The only gold rush in history where it costs you nothing to make the product. And it's the only gold rush in history where you have access to billions of potential customers for free. Get started today. And I can help you with your social media approach if you want to in one of my programs. Yeah. Okay. Why do some people wait to start their businesses, funds, etc.? Yeah, to start a fund, you got to wait until you have a track record, okay? But businesses, you shouldn't wait. You shouldn't wait. I don't care if you're a teenager or you're in your 70s. You always got to be starting a business. You got to be writing business models on the side all the time, business plans, I should say. And the way you know you have a good business plan, or one at least has a higher probability of success, is as follows. You actually finish the entire business plan. Okay, and this is my business plan template, which is part of my venture capital boot camp for my clients, right? I ask you like hundreds and hundreds of questions. And a lot of people give up in their business plan after, 10 or 20 questions or so. That's not a bad thing. It's just because you proved to yourself it's not a good idea. So again, the way you know you have a good business plan is if you finish the business plan as part of my venture capital boot camp. Yeah. All right. Let me see. I'm excited about SpaceX going public. Should I wait to buy because of potential volatility, or is it better to open a small position right away? Yeah, so when it goes public later this year, and probably Morgan Stanley's going to lead it because they lent Elon Musk a lot of money to make Twitter happen. I don't know. It all depends on the valuation. Yeah, I think it goes public at a market cap of $1 trillion, and then I think it goes to $1.5 trillion within a year easily. What does that mean for Elon? That means he's going to become the world's first trillionaire later this year. Yeah, but once the S1 is released, similar to here it is. So once the S1 is released on SEC.gov, then you start doing research on it. Okay. Until then, we don't know when the IPO is coming. And if you want, I can go to SEC.gov right now and do a case study in any company on this stuff, which I talk about in my MBA program in a lot of detail. All right, next question. I have a SaaS software company. SaaS, S-A-A-S, means software as a service. Means you rent software, kind of like Salesforce. I have a SaaS software with very little revenue. How should I raise capital? Yeah. So you got to write the business plan first, create the investor slides, and then let me teach you how to sell. Yeah. And you can join my program. Just set up a call with me. Just go to the chat. Just set up a call with me. Yeah. And you're saying, should I raise money from venture capital firms, angel investors, or private equity? Definitely angel investors, meaning high net worth investors, because the sales cycle is quite short, especially if you just started. Private equity, they don't really invest in startups as much. They're kind of like for turnarounds. They'll buy companies that are not being run properly. They'll buy them, fix them, and then sell them back. Yeah. What is tougher to crack? A hedge fund job in Canada or London or United States? In your view, also, are all hedge fund managers greedy and money focused all the time? A lot of them are divorced too. Yeah. Well, once you make money, you're God. You're never going to be happy in life. Yeah. All right. And a lot of them, what they do is they get another wife, a trophy wife later on. It's just disastrous. Yeah. And when I worked on Wall Street, I remember every Christmas bonus season, myself included, we were all depressed because we compare themselves to ourselves to those who had more. The only time you should look in your neighbor's bowl is to see if they have as much as you. I'm a capitalist, not a communist, but at the same time, I'm a realist. Yeah, focus on happiness. Don't make money your God. It's one of the 10 commandments. Thou shalt not have any false gods. Yeah. Okay, in terms of answering your question, I would say it's easier to get a job in hedge funds in the United States because there's more of them than London. Okay, but New York's a bigger financial services market than Canada, in that order. Yeah. Okay, question. Any thoughts about Lan Yukon, one of the godfathers of AI, having left Meta? I don't really know anything about that. I'm sorry. Yeah. But the most important person at any company is always the CEO. And I want the founder to still be running the company. And Zuck is still there. So he's not as important to me as Zuck. Yeah. What is your opinion on the Balkan finance sector? If you were a student in the Balkans, how would you break into investment banking or private equity, since most of the colleges here are not target schools, et cetera? Yeah. So I have a lot of clients in Serbia. And so in that area of the world, it's the same as here. It's networking. Your network is your net worth. Relationships are more important than product knowledge. Yeah. You set up informational meetings, et cetera. Set up a call with me if you want. Just go to the link in the description. Thanks. Okay, let me get some breakfast. I'm getting hungry here. Okay. What do you recommend for passing the Series 65? Recently, I got sponsored. And how do you get clients? Yeah. So let me answer that in reverse order. To get clients, step one, have an amazing LinkedIn profile. We can help you write an incredible one. Then set up informational meetings, bond before business, then ask. Okay. And obviously, there's a lot more steps there, right? In terms of passing the Series 65, they usually give you a guidebook to practice from. Just read all those materials. Or better yet, do this. Okay. This is what my sons do. Go to ChatGPT and type this. I'm about to write the Series 65 exam. Create an exam for me, and then After I give you the answers, tell me why I'm right or wrong for each answer. Now, one quick thing I'm going to tell you guys, humbly. I can pass most multiple choice exams without reading the question, as long as they're not math related. Whoa, what does that mean? How do you do that? Well, you got to think like a lawyer. Okay, so when you're stuck, you got to do exactly this. I'm going to ask you a question. The multiple choice question is this. What color is this brick? And the answers are A, it's always green. B, it's sometimes yellow. C, it's always blue. Or D, none of the above. The correct answer is it's sometimes yellow. Whoa, why is that? Think like a lawyer, look for exceptions. Okay, always, like be that pain in the ass that looks for exceptions. The word always and never are always wrong. Let me explain. How can it sometimes be yellow? Well, it depends on the lighting, right? If there's a different reflection from the sun, it looks a little bit more yellowish there. So you get rid of extreme answers like always and never. Think of Venn diagram, whatever. And then just think of exceptions. And for those of you in school, and I told my kids this too, and this is something I used to do. I learned this from my older brother, Jamie, who I love. He's like a brother to me. After you get your exam back, always go to the TA or the teacher and argue for a higher grade. Nicely, obviously. If you do that every single time, your average GPA will go up 5 to 10%. Yeah, ask and you'll receive. It's prophetic's been true since the beginning of time. Okay. What is on your reading list of books for 2026? I think anything that Walter Isaacson has ever written that I haven't read yet. Yeah, I like biographies or autobiographies. I like to learn from successful people. I hate theory. Yeah, so I did the Steve Jobs book a couple of years ago, which is great, by Isaacson. Please do it. I did the Elon Musk book by Isaacson, which is great. I'll probably do Da Vinci and any of the other ones he's written as well. Yeah, I'm not a big reader of theory. I don't believe in teaching theory either. Like for those who have business degrees, have you ever really used a supply and demand graph? It's bullshit. Yeah. So yeah. And I listen to audible.com a lot. I have a subscription there. Or I think my wife might actually just cancel it. And every morning in the shower, this is how I get ready for work. Alexa, Wall Street Journal news.
From the Wall Street Journal.
AI is transforming industries.
Yeah, Alexa, stop. Yeah, that's how I get my news. I multitask. I work smarter, not harder. In terms of podcasts, I listen to Joe Rogan every week. So entertaining. Yeah. All right. Tommy, thank you, who wrote. You're an amazing teacher. God bless you. Thank you. Appreciate it. Jason wrote, I'm in my 40s. I want to pivot from project management to something else. What do you suggest? I completed a bachelor's in electrical engineering in 2010, finished my MBA in 25 from a U.S. school. Yeah. So for those of you that aren't happy at work, I want you to answer this question to help you get a new career. Ready? If I give you 30 days off starting today, you can't go to school, you can't work, and you can't travel. What will you do with your time? Whatever the answer is, that is your career. And I don't care what your answer is. I want you to follow your passion. If you chase money, you lose money in your dreams. If you chase your dreams and you don't give a damn what people think of you, and you fail over and over again, your dreams come true, and the money follows accidentally. It always does. It's the way it works. Okay. I'm 17. I want to start my hedge fund. I'm good at math. I'm right now studying how to do technical analysis of stocks, reading about Japanese candlesticks. What path can I choose? Yeah. So I don't recommend when you invest in stocks, don't ever be a day trader, please. Okay, I want you to look at, when you invest in stocks, look at fundamentals, then valuation, then a distant third, hey there, technical analysis, just to help you get in and out of positions. The longer the view, the wiser the intention. And most people don't understand that a lot of successful hedge funds are not day traders, right? They're long-term investors. And every year, the portfolio, they generate alpha, meaning they beat the index because of a handful of stocks they did a lot of research on. Everything else is noise. Be a long-term investor, not a day trader. It doesn't work, I promise you. Do you know why? You can't name, and when I say you, I mean everybody with love in my heart. You can't name a successful day trader that's been successful for decades. Give me their name. They don't exist. It's a scam. Just be a long-term investor. Yeah. Okay. What do you do and what not to do when catching a falling knife? That's a good stock. Yeah. Yeah. I know what you're talking about. So catching a falling knife, what that refers to is you look at the chart, it looks like death. And you're like, oh my God. Well, first of all, understand why the stock is going down. Secondly, be a contrarian, be long-term focused. Okay. Understand why it's going down. If you think the market's overreacting, then back up the truck, sister, brother. Buy the snot out of it and be long-term focused. Yeah. However, how do you know if all the bad news is priced into a stock? The way you know is if multiple bad news is released over a week or a month, whatever, on a stock and it doesn't go down. That means it's found a floor. All the tourists have sold the stock. By the same token, how do you know if a stock has found a ceiling, meaning it won't go up anymore in the near term? Well, if tons and tons and tons and tons and tons of positive news comes out and the stock doesn't go up, it's crowded long. Yeah. Okay. And then G wrote, I love you, man. Love you more. Thank you. Okay, Mattia wrote, do you believe in technical analysis? I heard a lot of people on the internet say it's a lot like astrology of the stock market. Yeah, it's voodoo. Yeah, I do believe in it, but only after you do your fundamental research and valuation-based research. I'll show you. Okay, so I always believe in doing, let me go here to my 100-step dashboard. I always believe in doing your qualitative research, quantitative research, financial research, and the very last step, step 99, is technical analysis right here. Okay. And when I create investment reports, and a lot of my clients will bring this to their meetings as well, the first thing you do is fundamental investment research at the top, then valuation, then technical analysis. And you can always, in this dummy data here, you can always print this out as well. And then you put your name at the bottom here, put it on the back of your resume. But I also set it up so you can click here to hide technical analysis if you're applying to work at a mutual fund. We don't really care as much about TA, technical analysis. Yeah. I hope that makes sense. Okay. Oh, Satans, who's Mark, originally from Michigan, but now lives in Arizona, who wrote, Happy New Year's, brother. Mark, great to see you, man. I hope to see you on our call, their Zoom call later today as well. Great to see you. All right, next up, I'm reading a Jim Simmons biography. Oh, let me know the name, actually. Yeah. I didn't know there was one out. So he founded Renaissance Technologies. It's cool, but he had a tough family life too. Dabbled between academic and trading with pals. Okay, so it's called The Man Who Solved the Market. Huh. Let me check that out. That might be a good read. Okay, Amazon.com. The Man Who Solved the Market. Okay, let's check it out here. Very cool. Huh. Thank you for that. I am going to buy that. I'll buy it on Audible. Yeah. Oh, my wife just canceled Audible, but I'll still buy it. Okay, I'll come back. I'll leave that link open there. Thank you for that. Appreciate it. Yeah. Okay. All right. Next up, Anthony wrote, I want to live in Wyoming for personal reasons. Yeah, a lot of people do it for tax reasons as well. Is it a good state to launch a small hedge fund with less than $10 million? I do think so, yes. Yes, for tax reasons, yeah. But you want to talk to a securities lawyer first. Yeah. Okay. All right, guys. That looks like Brian's image there, who wrote, use STC for exams like the Series 65. Okay, cool. Thank you. Okay. And then Matt wrote, what are your thoughts on Taleb's books? I've read pretty much all of them. You got to bring a dictionary with you if you're on the road, or I don't know, use your iPhone for a dictionary or whatever. They're a little esoteric. If you don't have time to read them, just go to ChatGPT and say, give me a 5-sentence summary of each book. But I think they're great. Yeah. The first one I read from him, my portfolio manager made me do this back in 2003 when I worked at my first hedge fund after I left Goldman. It was Fooled by Randomness. Yeah. I think he's great. Okay. How much money is too much money, assuming one can earn 10% annually from portfolio? I don't know how to answer that. But always live below your means. Yeah, that way you'll be much happier always. Yeah, and give it away too, and that's why I do what I do. I'm here to build 1,000 schools in Africa. All right. Surinder wrote, can you please give me a 2-minute brief about your courses? Yeah, I'll do it faster than that. Yeah, so I have a program, and what you can do is, in my program, you get access to my network. There's Brian. I have my MBA degree program here. You get access to it. It's like 500 hours, a couple hundred hours of other stuff as well. I don't believe in accreditation, and I'll never do it. I don't want governments telling me what I can and can't teach. I've got over 2 million paying students, humbly, in every single country. I teach based on my own real-life practical experience. I bring in guest teachers as well, like Gary, who's one of my heroes. He has 5 decades of investment banking and CPA experience. Anyway, here they are here. Yeah. All right. And I think I'm going to wrap this up in a second. Thanks. Should I stay away from options trading? I've read about it, about how it's gambling. Yeah, be very, very careful. Okay. Let me explain options very quickly. Okay, but let me take a step back first. So there's a global stock market, and then there's something called derivatives. The derivative market, which includes options, is massive. And you're betting on the rate of change in something. And the derivatives market is 6 times bigger than the global stock market. It's huge. And derivatives, remember calculus, the rise over the run, rate of change? That's all you need to know from calculus class ever again. Well, derivatives markets include things like options, which I'll talk about in a second, as well as futures, okay, as well as forwards, credit default swaps, etc. Now, the way to think about options is there's puts and there's calls. Let me start with puts. So let me talk about life insurance very quickly, because this will make a lot more sense. So I have a life insurance policy, and I'm worth more dead than alive. And I pay this much money every month. And if I don't die, I lose this money every month. And if I do die, my family get a lot of money, my wife, my kids, okay? So it's the same thing with stocks and buying a put on a stock. So Coca-Cola, ticker KO. And I'll show you a real example in a second on Yahoo Finance. So let's say I own a lot of Coca-Cola, tons of shares of Coca-Cola. And I made a lot of money on it. But I don't want to sell it because I don't want to pay taxes. But I'm worried that it could go down in the next 6 months for whatever reason. But if I sell it, I'll pay taxes. What do I do? Well, I can buy a life insurance contract on it, just in case. And that's called a put. So if Coke goes up 6 months from now, this is worth nothing. But if Coke goes down within 6 months, this is worth a lot. That's a put. A call, which is the other type of option, is the opposite of a put. A call means this. I invest a little bit of money in a stock. Okay, say I buy a call on Coke, ticker KO. Okay, if the stock goes up in a certain amount of time, I make tons of money. Like I can make 5x what I invest in the call. If it goes down, I lose money. That's it. That's it. That's options trading in a nutshell. Now, let me show you an example, and I'll build upon this. All right, so let me go over here. And what I'm going to do is I'm going to open my options spreadsheet. Hold on a second, open recent. It's a pretty big one. Hold on a second. You guys can't see this on the other screen. Here it is, option dashboard. Good. And then what I'm going to do while that's opening is I'm going to go to Yahoo Finance. All right, let's go here to finance.yahoo.com. And we're going to type in, we live in interesting times. I'm going to type in the ticker for Coke, which is KO. Okay. And the way you know that a stock has options on it is if you click here on options and you see data behind it. So Coke trades like water. It's very liquid. So here we go. All right. So let's say 6 months from now. Okay. Let's go to June. Okay. And options usually expire on a Friday. 6 months from now, I want to buy a put on Coke in case it goes down. Okay. All right. So right now, Coke is trading at 69 bucks. Okay. And let's say that I'm worried that Coke's going to be below 65 bucks. Okay. In 6 months. What I can do is I can pay $1.56. Okay. And these are sold in lots of 100. So 156 bucks to protect my 100 shares. Okay. And if Coke goes down below 65, this will go up a lot. If it goes up, I don't make any money. Okay. And that's for a put. Okay. A call is the opposite. So why would you buy a call? And I'm going to come to this spreadsheet in a second on how to do options investing. Okay. So let's say you do investment research on a stock and you see 500% upside in 5 years. Well, you can buy a call that expires in a couple of years, and that's called a leap. So I'm going to go right here, select the date. I guess the most you can do is 2 years out on ticker KO. And I can buy a leap. Okay. So I can pay, I don't know, let's say I think Coke's going to be above 100 bucks in 2 years, which it probably won't. What I can do is I can pay $63 at 63 cents times 100 contract to make money on if Coke goes above 100. And if Coke goes to 200, this is going to be worth a fortune. Yeah. Yeah. All right. Now, in terms of options, in my MBA degree program, I provide you with templates of a lot of stuff. There's 35 different option strategies I teach you. Okay. So I just taught you about a call and a leap and a put. Okay. Now there's tons of other strategies as well. Okay. And I also taught you about a married put. You own Coca-Cola, you buy the put as well. Okay. There's so many other ones too. Like you can, if you combine two of them, they're called strangles or straddles. And then you can combine four, and those are called iron condors, iron butterfly, back spread with puts. I don't know how I came up with that, but I'm a visual person, etc. Yeah. Yeah. So what I do is, I ask you tons, I teach you all this stuff from scratch. And then what I do is I help you understand exactly how to price each option, your maximum money you'll make, lose, etc. And then there's a report that you can complete here that gets completed for you partially as well once you enter in the data, and then you can print it out as well. Yeah. So that's options in a nutshell. All right, what movie is this from? I'm in a nutshell, look at me. How do I get out of this nutshell? It's a Canadian comedian in that movie. Okay. All right. Tony wrote, my first time here, I took some of your Udemy courses. It's unbelievable how humble and down to earth you are. Thank you. God bless you. Yeah. Yeah. Udemy, I think those courses I made like 10 years ago. Everything on my website, it's new. Yeah. I don't put them on Udemy. Yeah. Thank you. Okay. All right. And then G wrote, I'm also reading The Intelligent Investor by Benjamin Graham. Yeah. I read that too. So boring, eh? If you're going to read that, read like one chapter a day when you first get up. It's a little dry. It's so interesting though, because Warren Buffett, who He went to the same business school as me. He actually came and guest lectured a class in December of 1999 when I was at Columbia. It was a real treat. And his wife was there. God bless her. She passed away. And she was teasing him because she said that the only book he brought on his honeymoon was The Intelligent Investor by Ben Graham. And that begs the question, what book would you bring on your honeymoon? Only one book. And that might say a lot about you and your career aspirations. For me, actually, it's interesting. The book I brought was The Art of Happiness by the Dalai Lama. Yeah. And the Dalai Lama, I think in that book, he might have said something like this. It's fascinating. He said the problem with Western society is we sacrifice our health, our entire lives to make money. And at the end of our lives, we sacrifice all of our money to maintain our health. And then we look back and we realized we never really lived to begin with. So make 2026 about happiness. Our purpose is to be happy every day. Don't worry about the future, okay? Things are never as bad as you think. Okay, guys. All right, I think I'm going to wrap it up. For those in my my premium programs, I'll see you in, I guess, 10 minutes or so for my daily call with y'all, Zoom call. Again, my 11th annual, per this lower third here, my 11th annual Haroun MBA degree program starts January 26th. Click my calendar in the chat to set up a Zoom with me, or go to the description of this video. Would love to talk to you about it. There's limited positions, all that stuff. Yeah. All right. Love you guys. All right. And I'm going to end this call, like I always do, with a 1-minute video that's going to change your life. It's an interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. God bless you guys, and I'll see you guys next week. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.